Austin, Texas, the live music capital of the world, a tech hub, and a city that's been on a wild ride for the past few years. But if you're thinking about moving here, or even just trying to understand what's happening on the ground, there's one topic that dominates every conversation: the housing market. And let me tell you, it's probably even more intense than you've heard. Stick around, because we're about to dive deep into the real numbers, the stories, and what it truly takes to buy a home in Austin right now. If you're into real estate, finance, or just love a good story about a city in hypergrowth, hit that subscribe button right now. You won't want to miss what's coming. Let's rewind a bit. Not too long ago, Austin was the darling of the pandemic-era real estate boom. Stories were everywhere. Homes selling for hundreds of thousands over asking, bidding wars with dozens of offers, and lines of people snaking around the block just for an open house. It felt like the Wild West. Tech giants were expanding. People were flocking in from all over the country seeking sunshine, a vibrant culture, and no state income tax. This massive influx of demand slammed into a limited supply of homes, and prices skyrocketed. It was a classic, albeit extreme, case of supply and demand. But then, the music changed. The Federal Reserve started aggressively hiking interest rates to combat inflation. Suddenly, that 3% mortgage you could get in 2021 was a distant memory. By late 2022 and into 2023, rates had more than doubled, climbing to over 7%. For a homebuyer in Austin, this was a massive blow. A monthly payment that was once manageable suddenly became astronomical. For example, a $500,000 mortgage at 3% interest has a principal and interest payment of about $2,100 a month. At 7%, that same loan costs over $3,300 a month. That's a $1,200 difference, or over $14,000 a year, just in interest. This dramatic increase in the cost of borrowing money slammed the brakes on the market. So, what happened next? Did the bubble pop? Did prices crash? Well, not exactly. It's more complicated than that. This is where we need to look at the data to see the real story. According to the Austin Board of Realtors, the median home price in the Austin-Round Rock metro area did indeed come down from its peak. But here's the crucial part. Calling it a crash is misleading. Let's put it in perspective. Now let's talk about what it's like for buyers and sellers on the ground today. The biggest change is in the pace of the market. During the boom, homes would go under contract in a matter of days, sometimes hours. The average days on market was often in the single digits. Today, that number has stretched out significantly. It's now common for homes to sit on the market for 30, 60, or even 90 days. For sellers, this is a huge mental shift. They can no longer just name a price and expect a bidding war. They have to be strategic, price their homes realistically, and be prepared to negotiate. We're even seeing sellers offer concessions again, things like paying for a buyer's closing costs or buying down their interest rate. These were unheard of just 2 years ago. For buyers, this slower pace is a double-edged sword. On one hand, the frenzy is gone. You can actually take a weekend to think about a house without it being sold from under you. You have more negotiating power. You can ask for repairs and actually get them. The psychological pressure has eased tremendously. However, the affordability problem is still very real. While home prices have softened, the high interest rates mean that the monthly cost of ownership is still punishingly high for the average person. So, who is actually buying houses in Austin right now? It's a mix. We're seeing a lot of cash buyers who aren't affected by interest rates. We're also seeing dual-income households in high-paying sectors like tech who can still absorb the higher monthly payments. And there are the have-to-move buyers, people relocating for a job or having a major life event like a new baby, who don't have the luxury of waiting for rates to come down. First-time homebuyers are facing the toughest challenge. They're competing with high earners and cash offers. all while staring down mortgage payments that can easily top $4,000 or $5,000 a month for a modest home. To make it work, buyers are getting creative. Many are looking further out from the city center, into suburbs like Leander, Georgetown, and Kyle. These areas offer more house for the money, but come with the trade-off of a longer commute. The dream of a bungalow in South Congress is now reserved for a very select few. Others are looking at smaller homes, townhouses, or condos as a way to get a foothold in the market. The median price for a condo is significantly lower than for a single-family home, making it a more accessible entry point. Another huge factor shaping the market is inventory. For years, Austin's problem was a chronic lack of homes for sale. But that's changing. With homes sitting on the market longer, the number of active listings has been steadily climbing. We now have several months of inventory available, which is much closer to what economists would consider a balanced market one that doesn't heavily favor buyers or sellers. New construction is also a massive part of this story. Builders who are racing to catch up with demand are now sitting on a lot of newly built homes. To move this inventory, they are offering significant incentives. It's not uncommon to see builders offer to pay tens of thousands in closing costs, provide all new appliances, or most importantly, offer interest rate buy-downs that can lower a buyer's rate by 1 or 2 percentage points, saving them hundreds of dollars a month. For many buyers, a new construction home has become the most financially attractive option. So, where do we go from here? What does the future hold for Austin's housing market? Most experts predict a period of relative stability, not another boom or a bust. Prices are expected to move sideways or appreciate slowly, more in line with historical norms of 3 to 5% a year, rather than the 30 to 40% we saw during the frenzy. The biggest variable, of course, is interest rates. If and when the Federal Reserve begins to cut rates, we will likely see a surge of pent-up demand enter the market. All the buyers who have been sitting on the sidelines will jump back in, and that could heat things up again. However, it is unlikely we'll ever return to the madness of 2021. The city has more housing supply now, and buyers have been tempered by the reality of the last couple of years. The psychology has shifted. Austin is also still a magnet for job growth and corporate relocations. Companies are still moving here, and people are still following those jobs. As long as Austin remains a desirable place to live and work, there will be underlying support for its housing market. The fundamental economics of the city are strong. The story of Austin's housing market is a fascinating case study in modern economics. It's a tale of explosive growth, a sharp correction, and a search for a new normal. It's a market that has matured, moving from a period of youthful exuberance to a more sober adulthood. For anyone thinking of buying or selling here, the key is to understand this new reality. The days of easy wins are over. Success in this market requires patience, strategy, and a realistic understanding of the numbers. It's not the market it was 2 years ago, and it's not the market it will be in 2 years. It's a market in transition, and it's more complex, and frankly, more challenging than most people think. Thanks so much for watching. This is a topic that's always changing, so if you found this breakdown helpful and want to stay updated on what is really happening in markets like Austin, make sure you hit that like button and subscribe to the channel. Let me know your thoughts or questions in the comments below. See you in the next one.